paid including idle time will be paid at an overtime rate of time and a half. The labor cost budget for the year is dollars how many? So let's write production is equal to 36,000 unit. Want to say something? So total time is equal to 144,000. What is the rate at which they are paid? The rate at which they are paid is idle time is expected to be 10% of total hours available. That is including idle time. Due to labor shortages, it is expected that 20% of the hours paid, including idle time, will be paid at an overall or at an overtime rate of time and a half. So here, the idle time is mentioned as 10% of the total hours available. So calculate that as idle time is expected to be 10% of total hours available. Due to labor shortages, it is expected that 20% of the hours paid, including idle time, will be paid at an overtime rate of half. See, these are the time. These are the hours which are required. So 144,000 hours is the time which is required for the work to be completed. But technically speaking, they are paid much more. They are paid much more than what time they have spent in producing the products. Productive hours, when we have calculated we got it as 144,000, but the paid hours are different from the productive hours. So the total payment is made for the productive hours plus the idle time. Idle time is normally calculated at 10% of the total time. If the productive hours are 144,000, what is the total time or what is the idle time? That way we have to calculate. So the concept is, if we have 144,000 as productive hours, this is not including any idle time. Idle time rate is mentioned as 10% of the total hours. If idle time is 10%, so the total productive hours are 100%. The total hours are 100%. So productive hours are 90%. That is the logic there. So this is 100% the total hours. On that note, this will be 90%. So what are the total number of hours? So first we have to arrive at what are the total number of hours. After that, the calculation of idle time is on a different note. So first let's calculate what are the total number of hours. So the total hours we got it as 160,000 hours. Then the idle time is calculated as 20% of the total hours paid. So the 20 that portion of the total time, 20% of the total time, which is 160,000. The payment for that is made as 1.5 times of the normal rate. The normal rate is $12, but for those 20% of the hours, idle time is always paid. The overtime is always paid as um, overtime, not idle time. Overtime is always paid as 1.5 times. If nothing is mentioned, it would be 1.5 times the payment would be made. This 160,000 hours, we should split it into two parts. 20% of the total time is for overtime, OT, and then 80% of the time is at the regular pay. So let's calculate. One 60,000 into 80% in into $12. I think after this we have the cash budgets are mentioned so right from the beginning. Let's start with what is cash budget and learn about the cash budget. First, let's understand what is a cash budget. Okay, let's learn about the cash budget first. Yesterday, I gave you the explanation that cash is not kept idle. Cash is invested in some asset because cash kept idle does not give any returns. So it is invested in some asset, and then the availability of cash is also equally important because the payments have to be made. Payments for the operating expenses, the payment to the suppliers, these things have to be made. So it is important to prepare a cash budget because when cash budget is prepared, they understand about how much cash is required during each period. Then according to that, the arrangements also will be made. Let's say that if during any period, if they require more amount of cash than what is available, maybe then some arrangement for a loan or something would be made. For that reason, a cash budget is prepared. Cash budget has three main sections. First section talks about what is the availability of cash, what are the cash receipts. So cash receipts are assessed first. Then after cash receipts, then we have the cash payments which have to be made. That's the second section. Third section talks about the financing. These are the three main sections. But what do we have under these things? So what are the ways from which cash is received? What is the main source for them to receive the cash is what has to be understood. Cash mainly is received from selling goods. So on account of selling goods on cash basis or goods were sold on credit basis in the past periods, in the previous periods, um, and from them the payment is the receipts are made, the customers pay in the current period. So on account of whatever is that, if cash is received, has to be taken. The main source of cash collection or cash receipt is sales. Sometimes there may be certain other things also, like maybe they might have sold something, some other assets and all, then cash is received. That is also a possibility. So first, total up all the sources from which cash is received. Then payments are made for various reasons. The reasons are payments have to be made for purchase of material. So payment is made to the suppliers, plus various operating expenses for which the payments are to be made for operating expenses. For making the payment for operating expenses, like rent has to be paid, salaries have to be paid, wages have to be paid. So various sources of expenses which are there to meet all of them. So these are the main reasons why we see that. Apart from operating expense, also sometimes when they purchase assets or they repay loans, so there also the payments are made. So whenever there is a cash outflow, when there is a cash inflow, it is a cash receipt. When there is a cash outflow, there is a cash um, when there is payment, there is a cash outflow. Now here, at this point of time, what is done is the surplus or deficit has to be calculated. Surplus or deficit. How is it calculated? It is calculated by way of A, the receipts, minus B, the payments. So when the receipts are totaled up and the payments are totaled up, the difference between receipts and payments talks about whether they have more cash or they have less cash, surplus or deficit. Then another aspect also is considered. So at the beginning of the period, there must be some amount of opening cash balance, opening balance of cash. Opening balance of cash, add opening balance of cash to the surplus or deficit to check whether they have sufficient amount of closing balance. If this is positive figure, they take it forward to the next period. If it is negative, if they do not have sufficient amount of cash during a period, then the concept of financing arises, that they arrange for a short-term loan or something. That is how a cash budget is prepared. We need to check in what are the cash receipts. From that, what are the cash payments are deducted to find out whether there is a deficit or a surplus. Consider the opening balance of cash to find out what's the closing balance of cash. If there is a need, financing arrangements are to be made. Okay, let's get back to the exam kit, because right from the beginning only cash budget questions are tested. So let's take it up. 106, no? Before that, we don't have any sales but cash budget. Let's take up Let's do question number 106. So the question says, is preparing its cash budget for February using the following data. One line in the cash budget is for purchase of raw material, J. The opening inventory of J in January is expected to be 1075 units. The price of J is expected to be $8 per unit. The company pays for the purchases at the end of the month following delivery. Production is expected to be 4,300 units in January and 5,300 units in February, and each production unit uses 1 unit of material J. At the end of each month, raw material inventory is expected to be 25% of the requirement for the following month's production. This is only purchase. The value of purchases of J to be included in the cash budget for February is, we are not actually calculating cash budget, value of purchases. That's what we have to calculate. No problem. Let's get back to the Excel file 106 question number. The production in January is 4,300 and 5,300 in February. We want to know what is the value of purchases, value for purchases of J to be included in the cash budget. So what is the value of purchases in the month of February? So if we talk about February, we need to know the units needed for production, the raw material units needed for production in February. February production is 5,300 into the number of units which are kgs of material, whatever. That then opening inventory. So opening inventory should be the closing inventory of January. We do not have the details. So we just have the opening inventory of January. We do not have the closing inventory of January. Fine. If we have these, you're not even correcting me. If I make a mistake also, you just wait. So let's start with January. First calculate January. Understand about what is the ending inventory for January, then only take it up for February.
Ma'am, you're muted.
Yeah, yeah. How much is that? Calculate.
Ma'am, I got 4,550 units.
Okay, 4,550. So the payment for this, the price of J is expected to be $8 per unit. The company pays for the purchases at the end of the month following delivery. So when is the delivery made? Following delivery. At the end of each month, raw material inventory is expected to be 25% of the requirement for the following month's production. So the payment for these material which is purchased 4,550 units. Each unit would be calculated at the rate of $8. This will be paid following that delivery the next month. So following month the payment would be made. So it will be February. Cost of material is equal to 4,550 into $8. But it is not clearly mentioned, no? So the delivery, how much time does it take? How can we conclude that it is delivered in January and the next month the payment is made? One line in the cash budget is for purchase of raw material. The opening inventory of J's January is expected to this. The price is this. The company pays for the purchase at the end of the month. At the end of the month, after the delivery. So when is the delivery? But that how can we take it to be for the month of February? Okay. Each production unit uses one unit. Otherwise, also when we multiply, it will be only the same thing 4,550. At the end of each month, raw material inventory is expected to be this much. What is the value of purchases of J to be included in the cash budget for February? The sentence should have been the company pays for purchases at the end of the month, at the end of the following month after the delivery. Following month will become the next month. Month following delivery at the end of the month following delivery. Does it mean that it will be the next month?
Ma'am, I think it means that delivery happens, and then in the month where the delivery happens, after the month
Those
has
details,
passed.
but those details are not given. No? Number of days of delivery is not given. If the sentence is framed like this, it means that whenever the delivery happens in that month, the end of the month, the payment is made. So it cannot fall into February, Okay, we will see. Maybe somewhere some note must be included about that. We will take it up after that. Let's take 109. I saw in the group only 10 students are there who have enrolled for CIMA. Altogether 13 members are there in the group. So less than 10 are there. That's it. So this is not a part of your, it's not an integrated program. Is it an add-on program for you in the college?
And it is an add-on program. It's more of a partnership thing.
Okay, okay. So you also have CMA, CIMA, CMA. All these are add-on. Nothing is there as integrated program.
The subject will depend on the course. Some courses will have like similar portions.
Okay. No, the advantage of an integrated program would be some of the papers will be given as exemption. You don't have to go through that through those exams.
And we do have exemptions, yes.
How many?
And we are exempted from the entire first level and 3 papers from the second level.
How many?
Ma'am, on a total, we are exempted from 7 papers.
Okay, that's good. 7 papers are exempted. Done. Question number 109. DPLC operates a retail business. Purchases are sold at cost plus 25%. The management team is preparing the cash budget and has gathered the following data. Budgeted sales are as follows. It is management policy to hold inventory at the end of each month, which is sufficient to meet sales demand in the next half month. Sales are budgeted to occur evenly during each month. Creditors are paid 1 month after the purchase has been made. The entry for purchases that will be shown in the cash budget for August is how many dollars? Let's start. What is the payment which has to be made for purchases? So, but then to know what is the purchases amount, we need to understand this is the equation. To know the purchases, we need to understand what are the units needed for production, the closing inventory of raw material, and the opening inventory of raw material. Purchases are sold at cost plus 25%. The details are given. Purchases are sold at cost plus 25%. The management team is preparing the cash budget and gathered the following information. These are all sales, the anticipated sales for July, August, and September. Then it is the management policy to hold inventory at the end of each month, which is sufficient to meet sales demand in the next half month. Okay. We do not have the beginning inventory, ending inventory, the opening, closing inventories are not given. Only one thing what is mentioned is we have purchases are sold at a cost plus 25%. Only the information what we have is about the sales. So take the sales margin, sales amount and deduct the profit margin. Profit margin is mentioned as 25%. Cost plus profit is equal to sales. So if cost is taken as 100%, 25%. So now let's calculate what is the purchase cost. So that is how we have to calculate. For the month of August, it is 90. If 90 is 125%, 100% is how much? How much?
78.
72 only.
Yes, ma'am. Yes,
Okay, there is inventories also. 1 second.